Welcome to Edison's Accessing the Global Capital Markets interview series, where we speak to leading experts on the world's capital markets. Today's interview focuses on the London market and how London-listed companies can seek to access new and diverse pools of investment capital with a particular focus on the United States. We're delighted to be joined by Chris Mayo from the London Stock Exchange. Thank you, Chris. If you'd like to kindly introduce yourself.
Hi, my name's Chris Mayo. I'm Head of Primary Markets for the Americas at the London Stock Exchange Group.
So Chris, top of mind when thinking about the UK market is going to be Brexit. Perhaps you can talk a little bit about how UK listings have been impacted by the referendum announcement in 2016.
Actually, people may be surprised that we've actually seen an uptick in overseas listings since the Brexit referendum. So to take 2018 as an example, 3 of our top 5 IPOs were from international companies. And approximately a third of our new listings were also from international companies. And also in 2019, in the last 6 weeks, we've seen significant IPOs from the Middle East, from Network International, a fintech payments provider, which raised approximately $1.5 billion. We have also seen in the past week, Huate Securities from China raised $1.54 billion through listing in London. So really, we're seeing a lot of robust activity. From an Americas perspective, I think it's important to point out we've also seen a big increase in activity. So in 2016, we saw less than 5 listings from the Americas, and over 2017 and 2018, we saw 40 new listings from the Americas. So we've seen a significant increase in the amount of activity.
And what is it about the UK market that continues to attract companies, and specifically North American companies, to choose London as their primary listing location?
I think it's important to understand that the London market has a very different character and structure than the US markets. So we typically see smaller companies coming to list from both the US and Canada in London. And the reason behind this is that we offer a much more supportive environment for small companies. And I'm really talking about companies that are certainly less than $1 billion and typically less than $500 million of market cap. So what do I mean by supportive? We have an investor base, an institutional investor base, which is very focused on companies of that size. It's cheaper to list, it's cheaper to maintain the listing, there's a lower litigation risk. So when you take that as a whole, it is a much more supportive environment for those companies to go public. And I think a lot of people in the US just assume that the cost of being public and the regulation around being public is the same outside of the US that it is in the US, and it's actually just not true.
And what kind of businesses, from a size and geographic perspective, have you been able to attract to the UK market from North America?
It's actually quite a diverse spread of businesses that we've been able to attract. So from the United States, it's typically been tech and healthcare companies. So I'd say life science companies, non-biotech typically, but quite a broad spread of life science businesses that have successfully listed in London. We've also had businesses from the tech world. So we had Boku, which is a mobile payments provider, which was backed by well-known VCs like Andreessen Horowitz, Benchmark and Khosla, that was able to go public in the UK. We had a healthcare AI company called Renalytics from New York City that went public at the end of 2018. So that really just shows you the kind of diverse nature of the companies we get from the US. I say in addition to that, from Canada, we've seen a lot of companies from both oil and gas and mining deciding to list in London. And one of the main reasons for that is that those businesses believe that London offers a broad, deep investor base in comparison to their current listing in Canada, and there is a long history of natural resources focused investment in the London market.
So now let's move to the demand side from investors. So thinking about UK PLC, what is the geographical breakdown of investment into the UK market currently?
I think the main point to understand here is that the UK market in comparison to the US market is much more geographically diverse from an investor base perspective. So to put some numbers around that, we typically see about 30% of the UK market being owned by North American investors. less than 50% is owned by UK domestic investors, and the remainder is Europe and the rest of the world. When you compare that with the US, you actually typically see 80 to 90% of the US market being owned by US domestic investors. So if you list in London, what you're really getting access to is a global investor base in a way that you don't typically see if you are a US listed company.
And can you raise money in the UK from the US, either through an IPO or follow-on offering?
There's no issue really in raising money in the US through either a IPO process or a follow-on offering for a London listed company. So to take an example, for a main market IPO, it is commonplace to see significant demand from US institutions in those particular deals. You may see 25 to 50% of your deal demand coming from US based investors. And really, when it comes to AIM deals, you see probably less US participation in those kind of deals, but that's really driven by size. It's not driven really by any kind of restriction.
And a question we always get asked is about valuations and comparative valuations. So in your mind, how do valuations compare for the UK versus a US listed security?
The same kind of company, there really should not be a persistent difference in valuation across the two markets. But what I would say is that the US probably has a richer mix, so it has more growth-orientated businesses than the UK. However, I actually can see that as a positive if you're a company looking to access the UK market, is there actually is now a scarcity value to genuine growth stocks. So when a growth company is looking to list, and certainly a smaller growth company is looking to list in the UK, there is a significant amount of pent-up demand from UK institutions for that kind of opportunity. So you should not see a persistent difference in valuation between the two markets.
And thinking about the main market versus the AIM market, are there any barriers for an overseas investor to invest in the AIM market specifically?
No, there really aren't. And what I would say is that people need to understand that AIM and the main market share the same trading platforms. So really restrictions aren't really based on AIM versus the main market. Restrictions really revolve around things like investors and their own criteria. So you can have a main market listed stock and name listed stock at $200 million of market cap. An investor really shouldn't see that in any different kind of way from a restriction of investment point of view. So a US institution should be able to invest in either of those stocks without any kind of restriction. Now, as you go down into different pockets of demand, it really depends. So there may be investors who have restrictions for investing in UK listed companies, but there are also maybe certain investors that won't have those kind of restrictions. The one thing I would say is if you are not a US registered company, it's virtually impossible to get access to US retail investors. I think that's the point that everyone needs to understand.
Well, it's certainly been an interesting political backdrop over the last 2 to 3 years. So given the evolving dynamics as they continue to play out, what is your view for the short, medium and long-term dynamics for the UK market?
I think people just need to look past the short-term upheaval we've seen from a political and economic perspective. So the UK and the US are the two most important capital markets in the world. The UK dwarfs the rest of Europe in terms of assets under management and also the capital raising. The US clearly is in a kind of a field of its own from that perspective. And we need to think about the things that have happened in the last couple of years. Despite all of the noise you may hear in the wider market, we've seen fantastic deals get done in terms of growth IPOs in the US. In the UK in the last 6 weeks, we've seen two of the largest internationally focused capital raisings that we've seen in years. So I actually think that there is always going to be this kind of short-term volatility, but when things calm down, there will always be capital available for good companies to raise investment from institutions and other investors in both of those markets. And so I'm very positive about the outlook for both of those markets.
Chris, thank you very much for joining us. And if you would like to learn more about accessing new and diverse pools of investment capital, please join us July 10th at the Edison London office, where we will be hosting an educational seminar for UK companies on how to access the US capital markets. Thank you.